a delight. And today we are continuing with our topic, right? Accounting and what? Auditing, yes. And when you look at your business, if you're interested in a business, if you're involved in a business, don't just think about just doing the business and making money. The question is, do you have papers to show for it? Your income, your expenditure. Can you really prove, indeed, that there's the income and there's the expenditure? Yes, I would call trophy. Now, someone will buy one CD and then buy trophy one CD and the money is already gone. So we are trying to help us understand it. So last week we did a theory. Today we're going to do the practicals. Today I told them that the theory, we're not going to do theory. They should let us understand. Like, they should break it down. How is it done practically? So that we could pen and paper, meet me and big. So welcome. So we have our same guest from last week. If you have the questions you've sent me, I have them, I'll ask them. And again, if you have more questions, you can send your message to 0559680066. 0559680066. Social media handles, there, we are there. So just contact us there. And please share. And if you're a business out there or you're an individual who is trying to do something and you want us to help you put your business in the spotlight, please contact us, okay? Come and help our program, and then who knows, we'll be able to also promote your program and your business for you. So I have two gentlemen. The two gentlemen are here. My lady is here. We are just about zooming in. But let me just remind you a little bit about who they are. I'm not going to go so much into details, but just let me give you a little reminder, right, of who they are. So I have ladies first. I have Rihanna Razak, okay? She's currently the manager, KPMG, and she's the manager for Governance, Risk and Compliance Unit. She's experienced with a solid background in accounting and finance. She's a chartered accountant, and when it comes to financial analysis, budgeting, financial reports, and risk management, she holds 3 professional qualifications in accounting, banking, and management accounting. So if you want someone to manage your account, she's the person to go to. Rue.
Anita.
And her smile, her smile alone will kill you. I think that's one thing people see before they see you, I think.
Yeah.
Your smile.
Yeah, that's
true. It's very infectious. When you don't even want to laugh or smile, then you start laughing and you're smiling at the person. Yes, it's really, really very welcome. Thank you. Last week you were so wonderful, and today you are here.
Yeah.
Last week, in person, and we are very grateful.
All right.
Thank you. Very grateful.
Thank you.
So the next, Frank. Frank was here last week, so you saw him. He is the managing partner and founder of The Verge, an audit firm which provides assurance, tax, and advisory services for business and other organizations. He's a financial consultant, and he's also the managing partner. All right. One thing about him is that he helps businesses, particularly the small and medium enterprises, to navigate regulatory complexities. At the end of the day, he's there to help your business grow. One thing I love about him is also the fact that he's a chairman and independent member of the audit committee of the Ketu South Municipal Assembly. He remains an active member of ICAG, and then of course he's also a chartered institute. He's also a member of the Chartered Institute of Restructuring and Insolvency Practitioners, formerly GARIA, right? He's committed to helping businesses grow. So if you're a business out there and you want someone in terms of business, accounting, finance to help you grow, Frank's business is one of those businesses you want to look out for. Frank, you're welcome.
Thank you so much.
I hope everything is fine.
Oh yes, everything is fine.
And how was your trip here?
Smooth. It was smooth.
Hey.
Thankfully, the traffic was less, so I was able to get here in time.
We thank God. You know, accountants, when you ask them one question, full stop. When the lawyers come in, you realize what happened. You ask them one question, how they'll take you. If you don't stop, they do not stop. And accountants, you ask them one, they'll give you one. Unless you add 2, they'll still give you the 1. It's kind of like it's interesting to meet different professionals, and then the little things that goes with them. I like that. All right, so our third guest is Charles Owudi. Charles unfortunately cannot be here with us physically, but Charles is on Zoom with us. So every question we have for Charles, he will be there to answer it. He's a director with the Audit Service of Ghana. He's been working at the service for almost 2 decades. He's a chartered accountant and certified forensic investigations professional. And one thing I also love about him is the fact that he has a background in law. So when we are discussing it and we are a little bit technical in respect to the legal side, Charles will be of help to us. Charles.
Yeah, Anita.
Yes, I hope you are good.
Yes, I'm doing well, Anita. And what about
how
you
is
too?
Ho? And how is Denu, right? Denu is different from Ho. Come on, I'm in Ghana. How is Denu?
Denu is fine. Everything is quiet here. We are doing well.
Hello,
Anita.
Charles. Charles, can you hear me?
Yes, I can hear you.
I'm asking if it's raining as much as it's raining in Accra.
Unfortunate for us, it is not raining here.
Is it unfortunate? Oh, well,
Yes,
it depends on
yes.
where you are. Because how the winds are blowing and things are going, Accra, we're getting scared. All right, thank you so much, Charles, and I'm so happy that you were able to join us today. So let's zoom in. I think we have a lot of things to cover, but let's recap, right? So we will recap for us a little bit for us, auditing bit, and then Frank will also recap part of the accounting for us, and then we'll zoom in proper. So let's know what we did last week.
Let's do a quick recap here.
Yes.
Okay, so I think what we basically touched on last week regarding auditing. So auditing is just you bringing in a third party to come in to do a review on the financials, yeah? So if it's an external auditor, external auditors are more curious about what's going on with your financials. What kind of assurance can I give to the stakeholders that indeed the figures being represented on the financial statements are accurate and can be relied upon? Now, we also touched on who internal auditors are. Basically, they are within the organization, more of giving stakeholders, so the board and senior management, assurance around governance, assurance around risk management, and also assurance around control processes. Now, as a business, why should you subject yourself to auditing? Because, of course, you need to pay in a third party or an external person to come in to review the financials. But it's all about giving your stakeholders assurance. What information are you communicating out there? So as a business, I want to invest in you. And I want to understand the figures you are reporting to me, are they accurate? Can I rely upon them? So that's what basically auditors are there to do, to give the stakeholders who use the financial statement to make information that indeed the financials are accurate and can be relied upon. Now, we also touched on who regulates auditors. And for external auditors, basically, it has to do with ICAG. And we also try to clear the air around, does every auditor have to be an accountant? And we established the fact that yes, indeed, for external auditors, because our focus more is more on the financials and how, as a company, we are performing and reporting in terms of the IFRS standards. So the ICAG basically regulates for external auditors, and as an external auditor, you're also expected to be a qualified accountant. And we said for internal auditors, because basically it's more of assurance around controls, governance, and risk management, you do not necessarily have to be an accountant before you can be an internal auditor. But as long as you have the certified internal auditor designation and the required skills that you need to have to be an internal auditor for the organization. So we established the fact that ICAG regulates the external auditors. And for external auditing, it's done in line with certain frameworks. We also touched on the IFRS standards that external auditors are keen about. And Frank also made the point about the IAS, that's the ISA, right? The internal standards for auditing that auditors are also expected to abide by when they are performing auditing services for businesses. So I think that's what we basically touched on, unless I missed something out.
You're looking at my face asking that question.
So I think that's what we touched on.
Yeah, that's basically.
Yeah,
Yes,
basically that's
yeah.
what we touched on. But maybe on the accounting side, we talked about how accounting is the lifeline, of businesses, and the fact that every business have to be able to record transactions, have to be able to organize it, interpret and report, basically in a systematic way. So basically that's the definition of accounting. So I mean, everybody has to be able to be accountable. Basically, if you are doing business, you want to be accountable so that you know what you're doing, whether you're making profits or you're making losses, or not just for yourself but for stakeholders, as Raina said, so that whoever wants to invest in your business will have that assurance that he's not throwing away his money, his or her money. So basically that is the need for accounting, and it's what we discussed.
Oh, thank you so much. Charles.
Anita.
Yeah, so now we are zooming into this week proper. So my question then is, do accountants, or let's join accountants and auditors, do they owe any responsibility to the person they are accounting or the business they're accounting to, or they are auditing? They don't owe any responsibility?
Yes, of course. Don't forget, every business you see around, there are shareholders who own the business. So as an auditor or an accountant, you are there to give an assurance. Don't forget, the business owners or the shareholders who not know the state of the business. So as an auditor, you have a duty to ensure, we call it a duty of care, to ensure that the auditing or the accounting you are doing, at the end of the day, you do it in accordance with the various framework and the laws, so that you give assurance to the shareholders that indeed what assertions, when we present financial statement, when a business presents a financial statement, assertions you are giving that the business has made a profit. How are we do assure ourselves indeed the business has really made a profit? The management of that particular business are saying. So auditors will give an assurance, yes, indeed, the business is actually making a profit or making a loss. Don't forget, it is as a result of business making a profit that company can declare a dividend and pay to shareholders. Shareholders, they don't take salaries. Shareholders, some may not even be directors to even take allowance when they meet a board of directors, and then they take allowances. Most of them, they are independent-minded people elsewhere, so their interest is the business should work and make profit and pay dividend returns, the capital or the money they have given to the business. If it is a one-man business and you are auditing, maybe only one shareholder. At the end of the day, the shareholder wants returns. When the returns are either to reinvest or use it for different things altogether. So as auditors, we really have a duty of care to ensure that whatever assurance we are giving, it is a true representative. Some time back in America, if you heard it, about early 2000, there's an auditing company called, it is even collapsed, after Edison. They were those auditing Enron, that is a oil company in Texas. All the time they were giving assurance, yes, the company is making profit. Meanwhile, that was not it. I don't know, the company collapsed. And auditors, the partners in that particular auditing firm were jailed. They were held liable criminally because at the end of the day, you have given a false representation that indeed the company is doing well. Meanwhile, the company is not doing well. So as auditors, and for that matter, accountant, we owe a duty of care that whatever assurance we are giving to the shareholder, it is true representative that we are giving. yes, indeed, we owe a duty.
Thank you so much. Thank you so much, Charles. Any adults?
Okay, so I think for accountants, so as he's mentioned, what we are expected to do is to represent accurate figures and figures that are reliable, that stakeholders can rely upon it to, make a decision. So it's expected that whatever we are reporting, we should also note that we are acting in line with certain ethical code of conduct that guides the profession. So whatever we are reporting, we should just, always put that at the back of our minds, that people might not be there to watch us, but we'll have auditors coming in to do a due diligence to ensure that whatever figures we are reporting are accurate and stakeholders can rely upon it. Just to touch on the Enron case, yes, for us as auditors, we come in sometimes twice a year or even annually to look at the figures. We can't do all the work. You are in the company. There might be some things that you might be hiding that the auditor might not see, right? Because at the end of the day, when we come in, we are doing a risk assessment to sample certain things that we want to check to be able to give an opinion on the financial statement. But what is required of us is to exhibit our jobs diligently and to exhibit it with professional care, all right? So now when external parties come in, or in the event where there's an issue with the company and regulators are coming in to check, once it can be proven beyond reasonable doubt that as an auditor you didn't diligently do your work, that's when you can be sued. So that has to do with some legal ramifications around auditors. But once it's proven that you diligently performed your duties as expected, then there won't be any penalties on you as the auditor. I just wanted to add on to that because of the Enron case that he raised.
Yes, and so what we are trying to tell businesses is the fact that don't think that the accountant is going to chop your money, as you usually say, and the auditors will connive with the accountant, and those stories are there. But as we heard, should something go wrong, should really they do that, they can be held liable.
Yeah.
You understand? They can lose their job, they can go to jail. It's a whole thing. If there's fraud involved and all misery, there's a whole thing involved. Okay, so yes, you can't trust anyone 100%, but at least you have to put yourself out there. And when you're picking, you pick well. That's why we have some of them here. You are picking, you pick well so that you can do. So now let's go to the practicalities. Okay. We are going to look at how accounting is done and how auditing is done. I don't know which one you're going to pick, but you are going to pick one for me. Practically, if you are going to teach me how to account for my books, or how is this said, or how to audit a book. So an accountant has done the work, I'm the owner. I want to look out for some of the few things I should look out for when looking at that statement to be sure that what he's done is good. And if you are I'm a lay person, I want to really do my own accounting, as we said the previous time. How do we do it? So you pick one.
Okay.
Okay. So
I can. Which one do you want to take? Okay, no, you can go.
Okay, you take ladies first. So take the lead.
Okay.
Oh, so I can do the accounting, and maybe we can just do both.
Yeah.
Okay.
Yeah. So it doesn't matter. We can just throw in our thoughts on it.
Okay.
So maybe I can take a bite of the accounting, and then you can chip in. Okay. So for accounting, let me just go back to what Charles said, and I think even Frank touched on it. There are 4 key things that we need to note. The first one has to do with recording the transaction, summarizing it, analyzing, and then reporting.
So, okay. So you record it.
Okay.
So you just write it.
Yes.
Record means you just write it.
Yes.
Okay.
Record. Write it as it is.
Yeah.
Now, one thing about accounting that we need to note, it has to do with the double entry principle. So for accounting, now I'm going to try to break it down as much as I can.
You have to.
It's going to get technical.
You have to.
So for accounting, we have debits and we have credits.
Okay.
So we are saying that every transaction has 2 legs because the transaction will have to balance at the end of the day.
Okay.
So we need to have the debit entry and the credit entry.
Okay.
So mostly for income items, they usually have like credit balances. And then for items around expenses, they have the debit entry. And when it comes to the balance sheet, so we have so income and expenditure, that's the income and expenditure account. And then we also have the statement of financial position. We used to term that as a balance sheet.
Okay.
So the balance sheet, we have our assets, we have our liabilities.
Okay.
So assets are what I own and what I use to work in my business. And so for that, we also have, so I get into the details.
No, don't go into details. You let me,
so
when I
assets-
pick a book, what should I write?
Okay.
So let me come in.
Okay, when I pick a book.
Okay, so when you see, when you talk about accounting, there are what we call the statements of financial, the financial statements. So everything evolves around these statements, right? So we have, the statements are not, there are a couple of them. I would say there's one that is the statements of income and expenditure, or statements of profit or loss, or now called income statement. It has various names.
Profit or loss is okay.
Yes. So profit or loss.
Profit or loss. So
yes.
that one we know profit or loss.
So that one basically, it is to check your income against your expenses. It's as simple as that.
Okay.
So if you are doing business, how much income are you getting? How much expenses are you making? What is the surplus or the reserves after you are done? You've recorded income.
So I bought this for 50 Ghana cedis, and then I sold it, I sold this, and at the end of the day, I sold it for, let's say, 70 Ghana.
Yes.
But at the end of the day, when I was coming, there was transportation. I'll take it out. I ate.
Yes.
That one is bad.
It's bad.
Yes.
I ate.
So,
and then maybe my shop, the rent.
So
I take all of those out. So this
yes.
minus this.
Yes. Then you get either a profit or a loss.
Good. So let me say, for a business entity, you know, first of all, let's differentiate the business entity as a legal entity, right, from the individual or the owner.
Yeah.
So in business, we see the business as a separate legal entity that is independent of the owner.
Yeah.
So that is, I would just say this, we'll go back to sole proprietorships, but then even that is seen as different, only that in law, you are the same. But if you are doing business, you want to check how you are faring, you want to separate these two, yourself against the business. So now, as you are doing business, you make sales, which in accounting, technical term, we call it revenue, or turnover, if you want to call it. So you make sales, and then you also, prior to making the sales, you must have incurred expenditures, right? Or even after making the sales, you incur expenses. And these two are the vehicles that run the business, right? So as you make sales, these are money coming to you. Then you spend money. So let's say this caps, right? You go to market to buy them in order to resell. You buy them at 10 cedis each. And then you happen to sell them at 25 cedis each. Now, the 10 cedis is a purchase cost, right? Now, before they are available for sale, or let's say in a condition for you to be able to sell, you must have maybe incurred some expenditures, transport, you know, maybe the shop you're keeping them in, you pay rent, and so you'll be able to calculate all expenses that go into running the business. And all of that add up to form your total expenditure. Recurrent. We'll come to capital side, but total expenditure, right, in running the business. So you are comparing how much you're selling 25 against the 10 and against other auxiliary expenditures. Then you will be able to determine whether you are making profit or loss. So that is for the profit or loss statement. Now we go to balance sheet. What we all know is balance sheet, but also called a statement of financial position. That one is categorized in three main parts. We have assets, we have liability, we have equity, right? So assets are, you know, your capital that you have transformed to help you run the business. So I'm saying two things. One is assets. So properties that belong to the business. And those properties, how do they come about? They come about your own investment, or maybe you borrow money from somewhere to buy those properties that will help do the business. Then your own savings that you put into the business is equity, plus any reserves when you run business. Maybe at the end of the year, you made some savings and you put it back into the business. Those are reserves. Together with your own capital that you started with, is called equity. And then liabilities is your borrowings. So maybe you borrowed money to start the business, right? Those become your borrowings, therefore you account for them. So you see these three things on your balance sheet: your assets, your liabilities, and your equity, which is capital, basically. Then you also have the statement of cash flow. That checks your inflows and outflows. You know, how, as you are doing the business, the inflows are coming in by way of revenue, and then outflows are going out by way of expenditures, you know, both recurrent and, you know, and capital in nature. And then financing, as you borrow money or you put in your own savings, that is the financing aspect of your cash flow. Then we also have changes in equity or income surplus or retained earnings. So this is just checking your reserves, basically. And then what again? Maybe the notes that explain the figures. So when you go to the notes are explanatory, you know, disclosures that explain the figures on those statements I just talked about. And then other policies that, you know, you have, you know, taken upon yourself to go by, which are of international standard, and therefore you can be able to compare to other businesses. It's understandable when you present it to anybody. So basically that is just how I'll explain accounting, you know, for the layman.
So just to chip in, I think before we even get to all what Frank has said, it's important that we do the recording.
Yes, Charles. Yes, Charles, come in and then we will come in.
Yeah, thank you very much. I think Kumi has said everything, but just to add up, when in doing accounting, there are specific documents. I believe as business, we are referring to smaller business, other things. You have heard about cash book. Today, we want our business to know what a cash book is. It is just a book to record the transactions, various transactions, all your sales you are making, you record in that cash book. All the payments you are making, you record in that cash book. At the end of the day, that is at the end of every month, that cash book should be balanced. And when you balance that cash book, you have to give headings to your cash book. When it is sales will have their column in the cash book. If it is, let's say, transportation, the entrepreneur, you are born to buy goods and you pay T&T, you record it. You pay yourself salary, you record it. All the expenditure, including the sales you make, you will balance all of them at the end of the month and transfer it to what we call ledgers. Ledger is just a principal book of accounts where each individual accounts headings are sent in there. So when you put in there, at the end of, let's say, financial year, 12 months, all the ledgers are balanced. And then you extract something we call a trial balance, which will indicate your purchases you have made, the sales you have made. So we group them into revenue, we group them into asset and liability. So at the end of the day, these three items, the revenue and that of liability will be at the right side of the trial balance. And then the asset will be at the debit side, and you should balance. When they are trial balance, but you cannot extract your trial balance to prepare what Kumi said about the statement of financial position, which we used to call a balance sheet. Then you can now prepare your income and expenditure to determine whether you made a profit or lost. Then you can now prepare your changes in equity, that is your reserves. And then you prepare your cash flow, as he mentioned. The cash flow, I also want to explain that the cash flow is only taking care of cash sales you are making and cash payments you are making. Don't forget, every business or a business per se, not all the sales they are making will actually be in cash. Some may be on credit. If you have a business, oh, madam, I need one, pay you next month or next 2 months. When you want to determine your cash at the end of the month, although you have sold to Auntie B, but that money has not come to you. So in preparing your cash flow statement, although you'd have made profit, that credit sales you have made will go into your sales, all right. But in your cash flow, it may not be there. So as business, they should be careful. Those who love making credit, I love those smaller business. You see, they will go, you see them, they will write in front of their shops that
For
credit, we don't
tomorrow.
credit things here. Credit comes tomorrow.
Yeah.
That's a reason. Immediately you are selling your goods on credit, it means you are locking up your capital. Although you have made sales, but the money is not with you. The money is with the Auntie B. So at the end of the day, your cash flow will tell you indeed whether you have money to run the business as we go forward. Because don't forget, those who sold to them on credit, some may even die, some may not even pay. So at the end of the day, how are you going to run the business? So it's always you balance that. Our business owners, look at it. Give credit to those who are credit worthy. Some people will give them credit. When they see you, they will not even pass where your shop is. And at the end of the day, they will lock out your credit before you're like, you are selling all right, but at the end of the day, your business is going down because you are not getting the money. So that one is very important. So at the end of the day, when you get this 4 important statement, that is statement of financial position, statement of income and expenditure, statement of changes in equity, statement of cash flow, and then your note. Then as an accountant, we can say, yes, the business has a financial statement, which is ready for the auditors to come and audit and then give an opinion as whether the financial statement show true and fair view. So that is how an accounting should be looked at.
Okay.
Okay, so I think he has said some of the things that I wanted to say, but what I also wanted to highlight is that for most businesses that I've interacted with, record keeping is very poor. And sometimes you get in, a person tells you that I don't have any record, come and prepare my financial statement for me. And it's a problem because all of these items that have been mentioned, and for most businesses, I think their focus usually is around the income, and then they want to see the income, they want to see the expenses. But one sad thing too is most businesses do not record expenses. It's more of income. So I see my sales, I see my stock moving and all of that. But there's no accurate record around expenses. So it becomes difficult for you to actually tell your true profit. You might be selling, but your expenses are so huge that it doesn't let you make profit. And then sometimes you hear things like, oh, there are witches around my business and all of that. So it's important that we properly have our records intact. So once the accountant comes in, maybe it's a one-man business, accountant is coming in to support, I should clearly be able to see where the income streams are and what the expenses are, so I can properly advise you on whether you're making a profit, or maybe it could even give you insights that maybe this particular month, maybe sales is around this figure, is because of A, B, C, D. We're able to draw insights into it to be able to tell you how to perform, what kind of goods to even bring into your business, and how should you even manage your expenses. Because at the end of the day, as a business, what you can manage is your expenses. For the revenue, it's difficult. Sometimes you can price something 30 cedis, a customer comes in, you eventually sell it for half the price of something because maybe it's your regular customer, you want to reduce it and all of that. And we can't control the price on the market. There are a lot of competitions around. Yeah. So it's difficult to control that aspect of it. But the aspect that as a business we can control is our expenses. But how do you control something that you don't have a good picture about? So it's important that as businesses, as we are recording our revenue, our income stream, it's also important for us to properly record expenses. As you mentioned, things around rent, paying employees and all of that, most businesses do not record it. You know, because I should be able to see what my expenses are every month. Rent should be spread across so that I know that every month this is how much I'm paying for rent, this is how much I'm paying for electricity, this is how much I'm paying for water, for, you know, even taxes. But if it's not properly accounted for, then it's difficult for us to even see how we are performing as a business. And everything that they've mentioned, all of the accounts that we need to have in place, is the bloodline for it is records. Once there are no records, then it's difficult to, put out these statements for the business.
Okay. So now
Anita,
let's go
just
to
bit
the
of it. Just to add bit of it to it.
Okay.
If you don't keep records, like she's saying, don't forget at the end of the year, you are supposed to file your account and pay your taxes. And GRA, when they come in, they have a unit called tax audit unit. They will come in for the tax audit. And when they come in, any expenditure that you have made, and it is not directly related to the business activity, and you include it, they call a term that they will disallow that particular expenditure. So at the end of the day, you have made the expenditure actually relating to the business you are undertaking, but because there's no record to indicate that indeed the expenditure related to the business activity, it will be rejected or disallowed. At the end of the day, you see that you'll be paying huge tax and you'll be crying. So as she said, the record keeping, as we define accounting or we explain what accounting is, the recording is very, very important. Somebody will tell you, lawyer, you will say that the game is evidence. Is the evidence, is not hearsay. They will not come and say, oh, indeed, I paid this, I paid that. Where is the records? So the record keeping is very, very important.
Thank you so much.
And to add to that,
yes. Hey, we are here to go to auditing.
To add to that,
because I have a lot of
it is said that most businesses die, most indigenous businesses die within the first 5 years. And then what you have left are they're just surviving, keeping head above water. And mostly it's because of the lack of recording, as my co-panelists are saying, is the lack of recording, lack of accounting. See, most businesses, they approach this accounting thing as an emergency, issue where they don't invest into accounting and reporting. They don't invest into tax planning. They don't invest into financial planning. So when they meet a situation, for example, GRA brings them a bill, a tax assessment, which to them might seem very huge, which eventually will collapse them, then they now look for accountants and auditors and tax advisors to come and salvage the situation. But because they never invested from the onset, so it keeps them, it's like they don't know exactly what they are doing. They are just doing business, and then they are busy all the time, but they don't know exactly what profit they are making, what expenditures they are making. So most of the times, they will even report, or maybe GRA will come and do their tax audit, submit the assessment. You realize that some of the expenditures that they should genuinely be deducting from their profits, they will be disallowed because there are no records, or it's mixed with personal expenditures, which they cannot prove. So therefore, they end up with a huge tax bill, and then it affects the business. Yeah. So, and secondly, also, I think accounting softwares are very important, which businesses always feel reluctant to invest in.
So if I'm not an accountant and I'm just a business owner, if I get the software, will I be able to use it?
There are very simple ones that you can easily move around, maneuver your way to just keep the records, so that maybe once a while, maybe once in a month, the accountant comes in, reviews it. If you cannot pay the accountant to be an in-house accountant, then there are very simple ones. QuickBooks, for example, Sage, they're easy to...
QuickBook and Sage.
Yes.
I think Tally as well.
Tally as well. There are many other very easy to use accounting softwares that businesses can, invest in. Exactly.
Okay, so let's go to that account.
So let me just chip in something.
Hey!
No, what you've said. So what the benefits of the accounting software are for a business. Now the good thing about these softwares, once you are inputting the record, automatically it pushes the transactions to where they are supposed to be. So in a snapshot, you can just see how you're performing, how your income statement looks like, how your
Okay,
statements
just
of-
that software,
Yeah.
just
Yeah, so once
And is
you
it free?
input the record, so they have the demo versions and they also have the paid one.
Okay.
Now, so issues around, you know, confidentiality of information, cyber security. So for me, I'd prefer you go for the paid one. I think they have packages for it. So depending on whatever package you want to go for. But then they also have the free versions as well. But then the free versions obviously have some limitations. So what
yeah.
I'm saying that for you to be able to see the snapshot, it being prepared, it's preparing the financial statement for you that you can easily use. I don't think you might have access to all of that, but you can just, you know, easily organize your records properly.
at least until
Yeah.
you get an accountant to come and take
Yeah.
over.
And the good thing with accounting software is that you don't need to be an accounting guru to use it. Just have some basic, you know, training. You can easily pass accounting entries. It will hit the debit and credit size of your records, and therefore you have a nice statement to look at. That gives you an insight of what you're
What's
doing.
happening?
Yeah.
All right, so now let's go to the accounting bit.
Accounting.
The auditing bit.
Okay.
The auditing bit.
Okay.
Yes.
So I think she spoke about audit slightly, and then also Charles. So what I would say about audit is that, you see, audit. I'll touch on external first. Audit is to give assurance to the owners. Basically, the primary responsibility of the external auditor is to give some level of assurance to the owners of the company or the business as to the state of affairs of the company financially, you know. So that is the number one duty of the auditor, is to give an assurance as to whether or not the financial statements of the company or the entity are true and fair, basically. So auditors they owe duty to give that kind of duty of care, to give that assurance to the owners. But don't forget, it's not only to the owners. There are various stakeholders of every business.
Yeah.
So government is a stakeholder, the community as a whole is a stakeholder, you know, customers and suppliers and employees and various other people. They are all stakeholders. However, the number one stakeholder that the auditor owes that duty is the shareholders, the owners, because they appoint the auditor.
So let's say, for example, I enter into my business is there, my accountant has finished doing all the accounting he's supposed to do. As a layperson, I come in as a business owner who's a layperson. I come in and I look at the figures. What should I be looking out for? What are some of the red flags that should tell me that something is not going wrong?
Okay, so before I touch on that, the reason why companies would, you know, appoint an auditor is to have a second view, you know, an independent view of what accountants may have done. So the accountant is an in-house person, is working for you, the company, the owner of the company. But then you want an external person, an independent person, to give or express a view of what he has done. So therefore, that gives you that assurance I talked about. Now, for a layman or a business owner, you come to see your financial statement, and then you want, maybe whatever will give you an insight as to whether there is something going wrong, or first of all, you may check your trend, maybe historically. So maybe last year, how did you perform? This year, how are you performing? So you can check that and see the trend. Maybe last year you made profits of $50,000, right? This year you are making less, maybe $10,000. That alone gives you question marks. What's going wrong? You know, so you start to ask questions, and then as the answers will come, you analyze it, and then so maybe you are not only making less profit, you are actually making losses. So then you have to ask questions. Or maybe your assets have reduced when you know you've not sold any assets, right? But assets have reduced.
Let's say you have 5 cars, all of a sudden in the books it's 3 cars.
Good.
You should be worried.
So these are things that you can check You don't need to be an accountant or an accounting expert, but trend analysis is part of the ways of measuring, the performance of any business. There are other methodologies and metrics you can use, but trend serves as a good measure of analyzing what is happening in your company.
Because I'm so curious and want to know more about this bit, because usually the auditors come once a year, all things being equal. So if I'm going to wait until the end of the year, then my company will collapse. So if they can already see some tell signs that shows there's something wrong, then I could any day call on the auditor to come in to check.
And I think Anita also expenses. So if
Anita, can I also come in?
Yes, you come in and the rule will come in.
Yes, but the question you asked is maybe you are given a scenario where you don't have an internal auditor. If you have an internal auditor, periodically every month they come out with their reports, and then you know where your company is heading towards. That is the internal auditors. For external auditors, you are referring to will come annually. Don't forget, when they come, already we made mention of financial statement. Your financial statement has already been prepared, and then in that, management, under the supervision of the board, will make assertions in the financial position, income statement, changes of equities, cash flow. There are various assertions they have made. I don't know that there are various assertions, let me put it in that way. Presentations that they have made that yes, this is the profit you have made, this is the sales you have made, this is the expenditure. They are all assertions. So you as an auditor, you are now going into underlying figures and authenticate it. The process of authenticating it, that is what we call the auditing, giving an assurance that indeed you are the independent person. The management and the board, for that matter, they are within the company. So you are giving a final assurance to the stakeholders that yes, all the assertions that they have made, being it in the income and expenditure statement, being the financial position, because when you go to the income and expenditure, obviously you see your sales and then your expenditure made to derive your profit. When you go into your statement of financial position, your balance sheet, that is where you see your asset, the vehicle you are talking about. You are having 5 vehicles, now there are 3. Is it they have the vehicle? They are now having their been depreciated to their lifetime use, that they are no more having the value that they can use, or did they sell it in the course of the year, or due to certain reasons they have written the asset off from the balance sheet. So as auditors come in, all these things will be reviewed, and at the end of the day, don't forget, every auditor will give an opinion as whether your financial statement, the presentation they have made it, notwithstanding a misstatement, which could be fraud or errors within the financial statement, they will ensure that the misstatement, when we say the misstatement, that is the errors and then the fraud. The errors are unintentional. The fraud are intention. Those in the helms of the affair of the company may do certain things to enrich themselves. At the end of the day, that's what we call fraud. So notwithstanding the material misstatement, you may say that the financial statement shows a true and fair view, and people can rely on it. And you just don't give that blanket statement. That, don't forget, in doing so, the ethical behavior you must shown in the course of doing auditing. 1, you must be objective. Nothing like subjective decision taking. Everything you are taking, you should ensure that it's objective. Right thinking person will take such a decision. You should ask yourself, integrity in taking and giving assurance. Do you have integrity yourself? Are you there to ensure that you enrich yourself, but you are there to protect the name of your institution, or you are there to do other things? Do you have the competence? Every auditor should have competence in doing audit. Don't go and then something you don't understand, you 1 man 1,000. That is why when doing audit, you have something we call use of experts. So if I'm doing something about law, you, Anita, I'm financial accountant, I'm not a lawyer. I will contact the lawyer. They have done some valuation. I don't understand. I'll contact a valuer to interpret it to me. So at the end of that, I incorporate all these things into my report and give and pass a judgment on it as whether the financial statement shows a true or fair view. So in doing your auditing, first of all, you have to get your financial statement prepared by the accountant, given to you, and then you go into the various assertions within the financial statement and come out with your opinion, which is very, very important. If you give your opinion, let's say we have two main opinions you can give. Either you qualify your opinion or you unqualify your opinion. If you qualify opinion, then it means that your financial statement is something else. If you don't qualify it, it means your financial statement is something else. So you must ensure that you do a diligent work and come up with an opinion that can stand to test of time. You don't give opinion and then people take into making their decisions, and at the end of the day, it's something else. You find yourself wanting.
Okay. Thank you so much. Thanks.
Okay. So I'll touch on two things that he said. The first one having to do with the auditing. Now, for us as auditors, we need evidence. Once there's no evidence, then it doesn't exist, or it didn't even occur at all. So for small businesses, you see sometimes they struggle with having to keep evidences. You get in, somebody has bought something, you're asking for the receipt, and it says I didn't issue any receipt. Or they buy something, maybe an equipment or something for the business, you're asking for the invoice or even the receipt to show that indeed you purchased it, and there's no receipt. So once the auditor comes in, he wants to review your books, he wants to look at the financial statement, but he cannot issue an opinion if there's no evidence to back it. So it means that as businesses, as we are trying to, improve upon our records, it's also important that we have evidences for those. So anything that we've bought, anything that we've purchased, any expenses that we've made on behalf of the business, then it's important that we adequately keep those records so we can segregate them if it has to do with sales record, purchases, inventory, things that we are bringing into our business. So stock, people come in, they load, you come in, you ask, there's no record for it. So what means, or what shows that you actually spent that money? Now, once we keep records for those, as a business, you are even able to track it, to see if everything is being reported as it's supposed to. Because now you can even sit back to pick those records and check the books to see if the accountant or whoever you've put in charge is actually keeping the records as expected. Because sometimes you see instances where people are not always, some of the business owners are not always in the business, so they leave people to run it. And then you come back and you want to check if the sales stuff that has been recorded in the book is accurate. What are you going to use to check that? So you need to have, maybe if it's a sales receipt, that you ensure that once somebody has bought something from the business or from the shop or whatever, they should issue a sales receipt. And there can be numbers for it so that you can even track it. So people don't tear out of it to say that, oh, somebody bought, or even when somebody hasn't bought anything and something is being misreported for you. So that has to do with having, for us to adequately have records in place. So even you as a business, you can even do your own audit to see if everything is fine. Now, to touch on, as a business, what should you be looking out for to see if things are actually going on as expected? For me, I come from a family of business. So my mom is a business owner, my dad is a business owner. So for me, I can understand how, at a grassroots, how business works. So for me, what my dad used to do every day, sometimes I used to wonder, but he wants to see if the stock records are accurate. So every day on a daily basis where he comes, he wants to check to see if what I have in stock is as it is in the books. And once sales are being made, it's recorded into a sales book, then he wants to see, has it been deducted from the sales record? How much do I have still left as records vis-a-vis as sales? Can I marry the two to say that, okay, indeed, I brought in 20 goods, I'm seeing sales 10. It means that there should be 10 left, right?
Yeah.
So on a daily basis, that's what he does. He basically takes his stock, his books there's the book for recording the sales, and then he tries to see if it's the same as the stock. Now, to even go beyond that, now he wants to check to be sure that the stock actually exists. Because there are some instances where you can come in and count it, but the boxes are empty. So as a business owner, these are some of the things that you can even be doing on your own to see, because revenue is an aspect that people can fraud us on, because they can sell goods, they might not record it, they sell it cheap, and they try to steal from you as a business owner. So what you want to do is to ensure that you are properly recording those sales, and then you are also from time to time checking in on your stock to see if it's actually the case. And you can even do some form of analysis to see what kind of stock do you have left, what should you even bring in. So at least you have a fair idea of what are the things moving out, what are the things moving in, and are you seeing the records? And then you want to marry it back to your bank statement. If the money is being paid in, if I can actually see it. And then you also want to look at your expenses to see if the expenses are actually accurate, if there are records for that. And then I can say that, okay, I'm making a profit or loss based on.
My time is up, actually. So let me give everyone under a minute.
Okay. So what is
the take home for you? Yeah. So Frank, what's the take home?
What Rainer's father is doing basically is audit, but of course we'll say that's more like an internal audit.
Yeah.
So every business, right? Every business owner must have some, we call something risk-based approach or skepticism, right? Auditor skepticism. The fact that there is a risk that something is not going right, and so you want to check, you want to verify, you want to analyze, you want to confirm, especially when it's about third parties. You want to confirm with a third party. That gives you the level of assurance that you need. So every business owner should not just create a business and go to sleep. You have to be on the field.
Most especially now that the thieves are abound. Someone comes to work for you for 1 week and the person wants to buy the kind of iPhone you are holding.
Exactly. So that is why I always maintain that businesses should invest in accounting function, both either getting an accountant, a professional accountant,
or a software,
or getting a software where they are trained to be able to use it.
Yeah. Under a minute.
What management has done a minute?
Summary. What is the take home? What is the one thing you want everyone to take from this discussion?
Okay, so for me, what I would really want to emphasize and drum home has to do with record keeping. Because as a business, once you don't keep the record, you're not able to make any meaning out of the business. It's just like you're just running the business, but you're not actually running it. You understand? It's like driving in the dark. Yeah, because you are not able to see where income is coming from, where income is going. You're not able to chase the money to even see how you are performing as a business. So for me, it's critical that as a business, you should have adequate records for those businesses. And as Frank mentioned, once you are not there on a day-to-day basis, you should be able to do some form of, analysis to just check on your own to see if the figures are matching up and tracing it to the bottom. So from sales, you want to look at stock, if everything is in place, and you want to trace it down. So how is it coming into your pocket, and the expenses that are made? Do they have evidences for it? Because sometimes you might not be there, they say they've made an expense, but where's the evidence to back that expense? So it's important that we look at it too. The income is accurate, expenses are accurate, then I can rely on the profit.
Thank you so much. Charles, under 30 seconds.
Yeah. Thank you very much. Well, that I want those listening to us and the businesses, no matter how small you are, you need somebody to keep your books for you. It may not necessarily be a qualified accountant. Get somebody to take records for your business for you in relation to accounting. And at the end of the day, get somebody like my colleague said her father was doing. At least let somebody also do cross-checking for you. May not necessarily mean full auditing, but at least get somebody to also go through it. As somebody records, another person check it for you as the form of auditor, so that at the end of the day, your business will not collapse within the 5 years, as Frank alluded to. It is very important when businessmen and women, they hear that accountant, hey, for me I can't pay. But if you don't pay that money to somebody to keep the records for you, your business may not even there for you to think of keeping your money and not getting somebody to keep records for you. At the end of the day, it's very important you keep it so that you don't run into problems with the tax authorities. Get records kept to defend yourself in relation to your business. Thank you very much.
Thank you so much. Under a minute, Niaka so far, and I say, if I show what business, my business and running, when I just running business. What I say, Inti say, only she crap a bookie be a doubt toy, you know, a doubt toy in terms of your business. I hear when you be a film. And I hear all the shame. You be people pack a cry be to who a bit me answer. Because when this paper now, accountants also say the name of the game is evidence. Lawyers also say the name of the game is evidence. In the evidence, they just say, Obisa matowe. Then I just say the panetowe. Who call shop who told you 10, or see my ton 5, I got 5. Why should or ton 5? Why should say 5 no or can say I can, why should say 1? Who call no. And I want question because I say I got 5. Intima we need that form. Na hwehwemu yie. So that obetimi I see as some say our softwares be cry free. I obetimi dey show say na obetimi aye one kasa accounting kakra. So that we za bookkeeping and accounting kakra be show say na obetimi use. No tutimi use no fine. Na fe later we for accountant ne ba otimi be your papers ni yama. Obe show so say na bibia obi wi a wo mbehu. Because say no nkofo ma be business nkofo ma ba. We are not my baby out. Until by the time I will 2 winning and send a franc kind. Within 5 years, our business collapsing. We don't use so yes, that be scandal money about, but expenses and a tree be alcohol. We share why show mammy for book, for paper, pen, straw. When you are to toy, when you are to, when you with you, normal maths, na church will be at all. Won't see I say, cry a church. Nanya paper be auto receipt edaho accountant ne ba edwa untimi ntua na every day every week ra about every quarter na every month kra no be your papers ne mawa obeti bibia ase obema wa bibia. Indeed, that's what we are saying. Please don't let your business collapse in the first 5 years. That's what happens to most businesses in Ghana. Keep records. The name of the game is evidence. Legally, accountant wise, the name of the game is evidence. So if you don't have it, it means you didn't do it. So that GRA will not come after you to pay huge taxes when you don't even have that kind of money. So let's just thank, I guess, so much. We are so grateful for what they've done with us. You've learned something. Yeah, you've learned something. And so I also say is that next week we'll start with procurement. So for the next 2 weeks, we'll be dealing with procurement, when you are procuring in terms of private company and a public company. We'll be looking at that sector as well. And I really want to say a happy belated birthday to my mother-in-law, Ama Asantoa Apia Kube. This week was her birthday, and I want to say we love her, we cherish her, we pray that God protect and guide her throughout her whole life. All March born. Please enjoy yourself. And we did March, Ghana month, African Prince. Next week we'll stepping out of African Prince because our month has ended. Please take care of yourself, take care of your business, and let God take care of us all. Amen.